as the Senate is working on a health care rework right now that pretty much repudiates what House Republicans have come up with. But the president back on point and on message and on an agenda that he thinks and already has created a lot of jobs and a lot of economic boom for this country. We're action right now to all of this with Brian Brenberg, the King's College Finance Chair. We've got Quincy Krosby here, Prudential Chief Market Strategist, and Michael Murphy, the Rosecliff CEO, Managing Partner. So, Mike, ended with you, and I do want to encourage, we can interrupt with each other. This notion the president has that this would boost the economy, this would provide a lot of jobs. Democrats like to say that, and I'm not trying to characterize this in party language, but he has had more interest from Democrats on this, the whole Comey thing notwithstanding, than he's gotten from Republicans. So where is this going?
I think this is going to pass, Neil, because I think whether you're a Republican or a Democrat, you want to have a strong economy. That benefits all of us. So I think once the Democratic Party can get past just attacking President Trump and everything he says or does, I think when they actually look at this, and we do get the details, and they look at it and realize how it benefits each and every state, how it benefits large business, small business, and individuals, I think everybody out there is going to realize that it helps them and it's going to help the country as a whole. So I think this passes.
And it is a leverage point with Democrats, but the question is, how does he use it to help get past some of the other things that are not very palatable with Democrats?
In other words, is this part of the bargaining?
I mean, that's what he's been talking about, and it seems like it has to be, because you see no interest from Democrats on tax, health care, and look, those packages can be a lot better if you get more buy-in. So how can he use infrastructure, which a lot of people like, to get those things through? I'd like to see him come out and talk more explicitly about that.
Just wait, you know, we're going into the driving season for Americans. We're going to be driving all over the country. You know that people are going over bridges that you take a deep breath and hope you get across. Roads that you hope your tires are on. They are going to be writing to their congressmen, absolutely, and get this done. And
well, a number of governors in New Jersey, for example, they've raised the gas tax. The federal government has not touched this since the early 90s. Is it possible that that is out there?
Well, look, and can I just say that politicians always love these kinds of projects because their name always ends up in these kinds of projects. And that's fine. But if this is the only thing the president gets through, if he doesn't get tax reform, he doesn't get health care reform, if he doesn't continue to get regulatory reform, this is not going to get us to 3%. So it's a positive step, but it has to go along with the other pieces of the package.
But you need one step, right? I mean, we're not going to make a leap. We need to get one step. I think the president needs a win. So if this is a win, kind of gets some people realizing that we can work, both sides can come together and work for the good of the country, that's a positive.
Do the markets need this, though, guys? So you always look at how, even now nominally up, a lot of these so-called infrastructure play stocks have been doing well. Today's a mixed bag. But that they're pricing in all of this getting done. Are they, or is this based on earnings that are much better than expected, growth maybe potentially better than expected? What?
Earnings came in, especially the top-line revenue growth, Neil, something that you can't fudge. It is how many widgets have you sold, how many goods and services have you sold. We saw the best numbers that we've seen in about 5 and 6 years just on the revenue growth.
But if you took that away, so all of a sudden it didn't look like the time frame was doable, or they're running into roadblocks, or the Comey thing explodes into something bigger. By the way, we're getting some information on that I will share shortly. Then what?
Well, then, you've seen it in the 10-year yield. That's part of it. It came after the
10-year Treasury, the yield has collapsed.
Started to move down very close to maybe below 2% if it goes there.
Which portends that market thinking a slowdown is inevitable.
Because there's a tug of war in the data.
I think Wall Street has, for a long time, said they have a longer time frame in these policy moves than Washington, D.C. had. You know, the Beltway insiders, this has got to get done in February, March, April. Why isn't it done yet? Wall Street says, no, this is going to take time. If it doesn't happen by early next year, then they start getting nervous. But I don't think the expectation on Wall Street was that this was going to necessarily get done by June. And so they're not as worried.
So when Kevin Brady, the man who runs the House Ways and Means Committee, was telling me that it's still doable this year, he ideally would love that. I'm talking just the tax cut. He'd still like to make it retroactive to the beginning of this year, but he's not sure about the time frame. Well, if he's not sure, as the House Ways and Means chief, and he's hoping that the Senate moves, that he's moving at a pretty breakneck pace, then could Wall Street live with a next year
I think
tax cut?
most certainly it could, because I think
So delayed is okay, denied is not okay.
Delayed is okay. Denied, you have to see. And the market's telling you right now, though, Neil, that it's not looking at denied. So I believe it's telling you that the earnings are strong enough to keep us where we are. And the bullish case is if you get the tax cut or you get some sort of growth initiatives, that we actually take another leg up in this market.